After discussing with CEO and President of Coldwell Banker Ryan Gorman last week on the state of the market, his predictions, what we're seeing with lending, real estate in Florida, real estate around the country, I thought it would be appropriate to follow up with a local, hyper-local expert with mortgages and ask his take on where he sees things now and where they're headed, and some advice and tips and tricks with regard to lending. So today I'll be sitting down with Craig Cooper, wealth mortgage banker, today to get his advice, and stay tuned for all things mortgage. Okay, well, we are here with Craig Cooper, private wealth mortgage banker with US Bank. You've been in the business a long time.
Long time, Shayla.
How long is long?
Well, various aspects of it. 30 years?
Ooh, you got me beat by 10 years.
Well,
so
that's good.
Tell us what you primarily do at
Sure.
the bank and how you can help our clients.
Well, one, I want to thank Shayla for having me. I've been in business for a long time. I'm a private wealth mortgage banker with US Bank. We're the 5th largest bank in the country. My business is primarily in the jumbo luxury area, dealing with high net worth individuals. Now, what that actually means in the mortgage world, a conforming loan, a standard loan, currently has a loan limit of $647,200.
Which that went up actually over the last
It goes up every year.
Okay.
It goes up with the value of housing prices. So you go back 4 years ago, that may have been $400,000.
That's right.
Last year was the largest increase that we've ever seen because of what's happened in the housing market. Prices have gone up so much.
That makes sense.
So it was a huge escalation. So you have different type of pricing for conforming loans and jumbo loans, and even something separate for like private bank, high net worth individuals.
Okay.
So most people in the past would have thought that conforming loans had a lower rate than jumbo loans.
It's actually the other way around.
That has
right?
flipped, Shayla. You're
Yes,
right.
I noticed.
That has flipped. Usually it's been holding over the last 18 months. That jumbo loans, and then the loans that I can do in the private bank are substantially lower than conforming loans. So as an example, and I'm always careful when I talk about rates because they can change all the time.
By the time this airs, it'll be another % higher. No, hopefully not.
Or lower.
Or lower.
Rates have actually moved a little bit lower here.
Okay. Oh,
over the last 2 weeks.
Tell us more. Okay, now just to make sure and date the video, what's today's date? July 12th, 2022. And now say what you're going to say.
I can explain a little bit here.
Okay.
Is that there's some confusion when it comes to mortgage rates.
Okay.
Everybody knows that the Fed has increased rates. In June, they raised rates by 75 basis points, and they're fully expected to raise rates by another 75 basis points at the end of July.
Okay.
That does not necessarily affect mortgage rates. What that has an effect are loans that are tied to the prime rate, or you have an adjustable rate that's about to be changed. So the prime rate's now 4 3/4. It's going to 5.5. If you're trying to monitor long-term mortgage rates, look at the 10-year Treasury bond bill that trades daily.
Okay.
And that sort of anticipates the future.
Right.
They trade. So 3 weeks ago, when the Fed sort of surprised everybody, increased rates by 75 basis points, the 10-year Treasury went to 3.5. Conforming loans, 30-year loans were close to 6%. Jumbo loans for high net worth individuals went to like 4.875.
Okay.
Over the last 2 weeks, as the economic numbers have been somewhat slower, there's some talk about maybe inflation going down. We'll see.
Going down?
Going down. Well, the
Ding,
price
ding,
of oil,
ding.
the price of oil has dropped. The price of lumber has dropped.
In the last how long?
In the last 2-3 weeks.
Okay.
So the 10-year Treasury was approaching 3.5 3 weeks ago. Today, last time I looked, it was almost 2.9. So this has put mortgage rates down a little bit.
Okay, so let me ask you a question, and this is a real life example, which it's not my client, it's not my contract, it's like almost not involved, so it's okay to talk about this example. For jumbo, it's in, okay, so this is about a let's say $3 million offer.
Sure.
It's actually not in Florida. So the buyer offered, in the contract, you can put the interest rate as a contingency. In other words, like you're saying, here's the offer, I'm not gonna pay more than X% on the note, right? And they put in there contingent upon us getting a note of interest rate, I should say, of 5.7%. Do you see any issue with that in today's market with being a jumbo loan?
Most likely not at all.
Okay, but it's interesting that that's going to start coming into play a little bit.
Right, we haven't seen any of that for the last 2 years.
Well, I haven't had one like that in.
Well, most of them have been cash offers.
2 years,
right?
But it's something to think about.
Yeah, well, the market is changing.
Yeah,
and you could talk about that more than I can.
All day long.
So, as I said, talking about rates is always sort of a wild card.
Yeah.
But today, that person was buying that house with 45% down. Now, depending on the client, if it's not a high net worth individual, and I was looking at a 30-year fixed rate, we'd probably be 4 3/4.
Okay.
So 4.750.
Well, okay, let me ask you.
On a 30-year fixed.
What do you consider, this is an indirect sort of question, like what do you consider high net worth?
Right, with us.
$1 million?
With us, each bank is different. Mm-hmm. It's not tied to the loan size.
Right.
It's tied to
their
the
assets.
Net worth of the client. And that net worth includes their brokerage accounts, their retirement accounts, the house that they own, the equity in it.
Equity account.
Right, the equity in the house. It can include the value of your business. So with us, that is $3 million, which in today's market.
Okay, that's high net. Well, yeah,
right,
I mean,
that's high net worth.
A millionaire back in the day was like, ooh, now it's like the dollar value has gone down. Oh my gosh, there's a dog. Sorry.
Well, think about if you think about if you owned a house that you paid $1.2 million for 3 years ago. What's that? What type of valuation is being put on that today, Shayla?
It could be double.
Yeah, I was going to say $2 million
in certain markets, right?
And if you've worked for 20 years, how much do you have in your retirement account? A little bit less than you had 3 months ago with the stock market. So for a standard client, 30-year fixed rate probably be today 4.750.
Okay.
For a high net worth client, it could be 4.250.
Oh, so that's interesting because that comes into play behind the scenes on that offer. If they have a higher net worth, their rate could be
that
lower.
Loan's going into our private bank. Oh. I get to work in the private bank with a net worth of $3 million.
I want to be a high net worth.
Well, I'm sure you will.
I'm trying to get there. Okay.
And in the mortgage company.
Although we don't want to pay more taxes, right?
No.
Okay, sorry.
Well, I'm going to be careful what I say there.
Okay.
I see a lot of high net worth individuals
not paying taxes.
Yeah. Now, can I say something there? One, unlike other private banks, we don't require that client to have any assets with us.
Okay.
Which I'm not
that's
sure
cool.
if unlike our competitors,
that's
the
really
other
cool.
large banks.
Yeah.
And for some of those clients, when their tax returns, because of creative accounting or depreciation, don't show much income, we have what's called a liquidity shortfall. Mm-hmm. We don't have to have the assets, but we'll use a certain percentage of those assets to qualify as income. I do those quite a bit.
Well, that's really
quite
cool
a bit.
Because the corporations, that are smart, they follow the law, but they don't pay. That's like a tricky thing when it comes to
it tends to be the individuals. Mm-hmm. If you're a W-2 employee, that's a lot harder.
Okay.
But if you're self-employed, you're retired, you own a lot of properties, you're depreciating things.
Yeah.
People get very creative. I have to be careful about how creative they are.
Exactly.
But a lot of people have a lot of assets.
Mind a creative CPA. Okay,
no.
let's shift gears.
Oh, can I also mention something else?
Sure.
What I see becoming more popular in this market, and especially in the high net, also in the normal area, are ARMs. So
okay, good. I was going to ask you about that and portfolio loans.
Right.
So
well, our ARMs and anything jumbo is a portfolio loan. Anything else is basically getting sold to Fannie Mae and Freddie Mac, which the client never sees, but Everybody does that.
Right.
That's why our rates are more or less similar there.
Yeah. So, okay, that answered one of my
But
questions.
ARMs are becoming more popular.
Right, because people feel like the rates will go down, and at that point they can refi.
Right. And Shayla, what's the average duration of somebody owning a home?
7 years?
Yeah, somewhere around 7 years.
I think it's gone up. I don't know what's going on back there.
Somewhere
Anyway,
around
keeping
7
it
years.
interesting.
So ARMs are becoming more popular.
Okay.
Rates are lower. Today, depending on a 5-1 ARM, a 7-1 ARM, and a 10-1 ARM, and what that means is the rate is fixed for 5, 7, 10 years, but it's a 30-year loan.
Right.
So it becomes a 1-year adjustable after that. Those rates today on a 5-1 could be as low as 3.5.
True.
And on a 10-1, 3.875. Somewhat higher if I'm doing a conforming loan, but they're becoming very popular. As an example, I had something yesterday, a smaller loan, like $500,000 purchase and a $400,000 mortgage. They were being quoted on a 30-year fixed over 7%.
Okay, Finn agrees.
7%. Thank you, Finn.
Thank you.
I was able to offer them a 10-1 ARM at 5%. That's a
Okay.
huge difference.
Absolutely is. And it makes a difference in how much home they can buy, right? So
Yes.
speaking of that, as we kind of wrap up here, what do you see happening as we head into the second half of 2022 with respect to lending in your world in the mortgage
Well,
market?
that's very interesting because if I had a crystal ball,
You don't have one back there?
I'm looking for it for a lot of years. I thought I had one.
Tell me when you find it. You can help me
Okay,
out.
thank you, Shayla. Fed's going to increase rates without a doubt.
Yeah.
The Fed's going to increase rates. Well, never without a doubt. 75 basis points end of June. End of July, and probably 3 more times
I heard the same.
by the end of the year.
Yeah.
So we don't think they'll be increasing them by 75 basis points every time. But that means the prime rate, which a year ago was 3.25, and
Which is still, think about, historically low.
all-time low.
So people got used to that.
All-time lows.
And we got spoiled with that. And then now, when you should have bought a $500,000 house and now you're buying $1 million house,
Oh, that's what
you might be underwater in a couple of years. It's possible.
Yes.
In certain markets.
So like a home equity line, which is tied to the prime rate is now 4 3/4. It's going to be 5.5 by the end of June.
Yeah.
And in July, it's very, very likely that that's going to be in the middle 6s. Now, as I said earlier, long-term mortgage rates aren't necessarily tied to that. They're sort of looking a year or two in advance what's going to happen in the market. A lot of people think that we've had the high for the year in long-term rates, that there's some, that we could possibly be going into a recession, or maybe we're in one now.
I think that technically, we're technically in one when the numbers come out.
Well,
the numbers came out end of June, right? So we're technically in.
Well, it'd have to be 2 quarters of having a negative GDP,
which we are.
So,
Yeah.
But a real recession where unemployment starts going up, housing prices start to drop. I think the market's starting to price that in a little bit, and so mortgage rates may be leveling off here. As I said, they're down 0.375, 0.50, at least today. Rates change every day.
Yeah, and thankfully the unemployment is still low, right? As far as I know.
Yes, it's still.
So that's huge.
Yes,
that's huge.
huge.
Because if unemployment starts to go up, then we're going to have a bigger problem.
Yes,
I think.
and
Although, to go along with that, there's been layoffs in some companies. I mean, Compass, Redfin, now Remax.
Well,
so there's things creeping in the market. So.
And there's also been substantial layoffs in the mortgage industry, which is very cyclical.
How many? What are you seeing percentage-wise? For
That I
companies?
can't tell you, but I see
10%?
my company has been somewhat limited. But you have to remember, a year ago, we couldn't handle the business that was coming in because 60% of it not only purchases, they were refinances. That business is gone
For those people
to a large degree.
For those people that haven't seen the writing on the wall or felt like this is going to go on forever, it was overnight for those people. And it felt even overnight for us in the business, but that just goes to show you, when we summarize all this, that buy what you can afford long term. Real estate and mortgage, marry the rate, or whatever that thing is going around on social media. You marry the rate and buy the house, or whatever the thing is. I got it all wrong. It's such a long term mindset, and it's not a fix and flip kind of a market. You know, you have to live somewhere, you have to have a second home somewhere, you know, buy it.
And investment properties.
Right.
I can still put those in my portfolio and offer a low rate.
Sure.
And you know, what's also different in today's world than what it was in 08 and 09 is the credit quality. You basically have to walk on water to a large degree to have gotten a loan for the last 4 years, 5 years.
Which to me, I feel like is, I mean, night and day from
Night and day.
You know, pre-recession. It's
Night
like,
and day.
You have a pulse? Okay, you get the loan.
Well, back in 08, 09.
Yeah. Which
You didn't need a heartbeat.
Yeah.
And people were buying
Are you
20
on a
primary.
ventilator, barely living? Okay, you get the.
I'm going to be careful what else I'm going to say
Yeah.
there.
But yeah.
And if you haven't seen it, go and watch The Big Short. It's one of the best movies ever about what happened in 08 and 09. The Big Short. And I don't know if Sarasota is actually in the movie, but Southwest Florida is sure in that movie.
We go get on that. Okay.
Yeah.
Okay. Well, thank you so much.
My pleasure,
Thank
Shayla.
you.
Thank you.
And thank you for watching. We really appreciate your subscribing, liking, and commenting. And hit us up, shaylatwit.com.